How's it going, everyone? This video is going to be over market structure shifts, displacement, and fair value gaps. So let's get into it. What is market structure? Why do I need to know it? And how do I use it? So what is market structure? It simply just comes down to highs and lows, short-term highs and lows, swing highs and lows, relative equal highs and lows. As shown here, you have lower highs, lower lows, and then you can see trends change when you get those higher lows and higher highs. Now, why do you need to know this? Well, above and below these highs and lows, liquidity rests, right? People stops. You want to know where the liquidity is at because once it is taken, you want to see it distributed higher or lower, something that matches your bias. So, how do you use it? Well, first, we're going to need to define market structure shifts, displacement, and fair value gaps. So, market structure shift. Well, what is it? When you are trending down, you want to be looking at the highs for market structure shifts. A market structure shift will show you when the trend is changing. So, for example, on this 5-minute chart, you look at these highs. Not touched, not touched, not touched. You can see these are all lower highs. However, once you get into here, you can see that this is broken with displacement. So that will be your market structure shift. Now, what is displacement? Because you need it for a market structure shift. Displacement is just an energetic move up that breaks this structure, right? For displacement to occur, you want to see a fair value gap created because that shows that price moved rather quickly through this area. I kind of think of it as a distance, right? You want to see price reaching above this area quickly before retracing. So what do you look for after displacement? You want to draw out your fair value gaps. What is a fair value gap? Fair value gap is just a break in price delivery, right? As you can see, you look for 3 candles. 1 candle, 2 candle, 3 candle. Right here you can see these wicks overlap, right? Price was delivered well there. However, right here, this wick to this wick, there is a large gap. So that will be your fair value gap. So looking at the 15-minute chart, we have our market structure shift here, right? Energetic move up with displacement, breaking this market structure and resulting in a fair value gap. And that would be your entries. Now for a quick example. This was on the 24th, and we had a SMT divergence as well as, broadening formation and fair value gap touched here. So we were looking to get long, right? Grabbed a bunch of liquidity. There was a 1-minute entry here, but if you didn't get that, let's look at a 5-minute. We have a market structure shift here, right? Energetically breaks through this structure, reaches up, creates a fair value gap. So we draw out your fair value gap, and that's your entry. Even if you miss this one, right? We're aiming for these relative equal highs. So get another market structure shift here and here, and a fair value gap here. If you want some more info on how to narrow down your fair value gap entries, I do have a video on that. Just click on the top right. I hope you enjoyed this video. If it was helpful, please leave a comment below or ask any questions. Thank you.